Hey guys, gals, I sure appreciate you guys being here this evening. And my name is Bill Whittle. I'm going to be doing most of the session tonight. And if you're like I am, you might be a little nervous, a little bit uncomfortable sitting here in a large group. I know when I first saw the business some 30 years ago, I saw it in a little bit different situation. I was a teacher, I was a coach, and my wife had actually been introduced to the business by a gentleman she worked with. And so she asked me to take a look at the business. I really wasn't interested. I was getting ready to pursue college coaching. And but I don't know if you ever had one of those days in your life that if one more thing goes wrong, you may or may not come back, and the guy or gal that does that to you may or may not come back. That was my day. And so I told her, I said, you know, I'll go take a look at this. I'd been approached by a lot of different other businesses, but I'd never looked at anything other than teaching and coaching because that was my passion, that was my life, and quite honestly, I thought it was my calling. And so I went down, and I remember like it was yesterday. I took a look at the business, and the guy giving me the presentation was a chain smoker. Now, when I say a chain smoker, I don't mean he smoked chains, okay? He was smoking one cigarette after another. And about halfway through the presentation, true story, a gigantic cockroach walked right across the, crawled across the grease board. But yet it still didn't distract me from what I saw. For the first time in my adult life, I saw something, number one, that I knew I could do, and number two, that I knew I wanted to do other than teaching and coaching. So at that point in time, I joined the company, went home, told my wife, she liked to fell out, and I got excited about doing something in addition to teaching and coaching. Now, once again, it's important to understand this. Now, eventually I left teaching and coaching, but I did not join Primerica to leave teaching and coaching. I joined Primerica, and it wasn't even for the necessities in life. At that point in time, my wife was making pretty good money selling real estate, and so this for me was just for some luxuries. But then if you look at it in today's society, extra income, part-time income is no longer just for luxuries. Now, today, a lot of times it's for necessity, and a lot of times it turns into a plan B for people in case something happens to their full-time job. For me, I made a decision a few years after that, matter of fact, a few months after that, my income on a part-time basis that exceeded almost on a monthly basis what I was making a year as a teacher and a coach. So I made the transition to a full-time position. But tonight, that might not be your goal. That might not be your objective. But I want to thank you all for being here. And once again, I thank you for being here on time. Let me just get a couple of housekeeping chores down for you if you don't mind. If you would, if you haven't already done so, if you take your cell phones and turn them on vibrate, stun, mute, something, anything that don't make a lot of noise, okay, I appreciate that. I know everybody else around you would appreciate that. The other thing is, if you have any questions, I'm an ex-educator, so I know asking questions is very, very important. So if there's something you want to have answered, maybe just jot it down and try to remember that, and then afterwards we'll stick around as long as you want us to. We'll give you print material and everything we talk about. We're a very regulated business, so get your questions answered. We just can't stop during the meeting to do that tonight. The third thing is, just once again, professional courtesy, not necessarily to me, but somebody else in the audience that might get distracted if you get up and move around. The reason I say that is this, you know, that sometimes there's people here and they're really focused, really concentrated, and if you get up and move, it might break their focus, might break their concentration, and that might be the one person that's sitting there that's looking for something special to happen in their life, and that might distract them where they might not see everything they want to see. And the other thing is, we just want you to enjoy yourself. Now, with that said and done, I did enjoy the first time I saw this business, but I wasn't really happy with some of the things I found out that I was doing with my personal finances, because all the things this company talks about, honestly, Leslie, my wife and I were doing everything wrong. We made some corrections and changed our life, and just a few short years after starting with the company, we were able to become financially independent and really change our generation's lives to come. Tonight, we're going to talk about a lot of things, but one of them is what we consider is the best part-time business opportunity in American business, or you may be thinking about a full-time business. Now, we're very prejudiced and very biased toward what we do because, you know, a lot of us have been here for a long time. But tonight, once again, the objective is for you to decide part-time or full-time, what is that you want from Primerica. Does it make a difference what I want? Does it make a difference what the person sitting next to you want? It comes down to what it is that you want. And when we talk about what people want, we try to get you to think about strictly everything based on facts. There's a lot of people talk things, and when you see a lot of this stuff tonight, all I want to do is help you to make a decision, and I want everything based on facts, not hype, but facts. Now, there's a little rule called how money works. It's called the high cost of waiting. It's called compound interest, whatever you want to call it. But I use a little silly example, and if somebody else would help me, if I gave you a choice, let's say, anybody here for the first time? Okay, if you'd help me out right there. If I'm going to give you a choice, let's take a couple different people. I'm going to give you a choice, I'm going to give you a choice. And I'm going to give you a choice, I'm going to give you a penny a day, okay, and I'm going to let that thing compound every day for the next 31 days, okay? And at the end of 31 days, you got a choice. You can have whatever that is, or I'm going to give you $1 million in cash. Now, which would you choose, ma'am? You take the $1 million, because you know what $1 million is. What would you choose, sir? Take the million, okay? Now, that's a good choice because everybody knows what $1 million is. Now, it's the wrong answer, but everybody knows what it is. Now, sometimes you'll get somebody in the audience that'll say, well, I'll take the penny a day. And every time you ask them, they don't have a clue. They're guessing, okay? But if you took the penny a day, let me show you what happened. It would still look like after 14 days, a couple weeks, you made a mistake. But if you let that keep compounding after 3 weeks, it still looks like you made a major mistake because it's only 10,000. But after 4 weeks, after letting your money grow, on the 28th day, it clicks over $1 million, but then it compounds each day after that, and it comes out to 10.7 million. Now, which would you take? The penny a day, right? Because you have all the facts, okay? And that's what I want you to tonight. Think about the facts. I'm going to give you a lot of details, a lot of information. Now, when we ask people what people want, and we're talking about freedom, which is what this great country is all about, what we're really talking about is quality of life. Now, when we talk about quality of life, we're talking about two things: more time and more money. And think about this. I don't know anybody I've ever met in my entire life that says, I got too much money, I got too much time. I know that everybody that I meet says, I need more money, I want more money to do something special in my life or to help my family, whatever, and I need more time and I want more time. And so each of these things may be something that motivates you, something you want, okay? Once again, it's important that you decide tonight, what is it that you want? Not what you've been told all your life you can have, but what do you really want? And some people, it's dream homes. For some people, it's like a second house or a lake house. And I tell people down in the Louisiana area, we're not talking about a double wide on the bayou, okay? We're talking about really a dream second home, something you can really love to go to. Travel, entertainment. I know as my children are growing up, my son loves basketball, and we used to go to all the Final Fours and the NBA championships and the Super Bowls and the golf tournaments around the world. That was a dream come true to me that I could never have done if I'd been teaching and coaching, because two reasons. Number one, I'd have never had the money to do those type of things, but the other thing is I wouldn't have had the time to do those type of things. You ever been on a vacation where you're excited about being there and then it's time to go home and their kids are saying, can we stay, and the spouse is saying, can we stay, but you can't stay because two things. Number one, you don't have the money to stay, but the other number two, you don't have the time to stay, so you got to go home. Well, how about toys, cars, boats? Now, a lot of people have those type of things. A lot of people have nice cars, nice boats, nice big toys like that. But they're in debt. They had to go in debt to get those things. It's okay to want these things. It's okay to have these things, but you need to be able to pay for those things, okay? How about education for your children? You know how many people in this country have children that are on student loans? They said the number one reason for divorce, child abuse, and spouse abuse in this country is financial stress. And you think how many kids go to school for the 12 years they're there, they get out at age 18, they go to college, and either they take out a student loan and they get into debt, or their parents take out a student loan, which is a noble thing to do, but it's debt. And yet education is very important to our children. So that might be, important to you to be able to send your kids to college anywhere they want to go, and then to go visit them. Now, it might be not what they want you to do, but to be able to go visit them when you want to see them. And then how about this? I don't know how you feel about this. I know it's very important in my wife and I's life and now my family's life. It's just churches and charities and things that you really mean an awful lot to you. And there's a lot of charities and churches in dire need today that need people out there that are making more money that could actually contribute to those things that make an impact in society. And then the other thing is, how about just building a legacy? I know that some of y'all probably just like me. I grew up with no money. It was past poor. We called it PER. And we grew up, I remember the first time my son Blake saw the first house that the house that I actually grew up in. He said, Dad, I knew you were poor, but I didn't know you were that poor. And yet I was following the same path that my parents did. I got an education. They didn't get an education. My dad had an 8th grade education. My mama had a 5th. My dad got killed driving a forklift. My mama lost her left hand working in a cabinet shop, and so they couldn't really provide and change the family tree. And I said, I want to be the one that changes it. I want to create a legacy in my family that doesn't have that continual path of not having anything in life. So it might be to you just changing your legacy. But whatever it is that you want, you can make that a reality at Primerica. Now, I want you to think about this. You look at your time frame. We talked about some things you might want, but look at your time. Most people's lives revolve around their job. Even though you might want to spend time with your kids, even though you might want to do some special things, you really can't because you got to go to work and you got to make a living. But what we talk about at Primerica is taking your life and revolving your business, not your job, but your business around your life. And every year, my wife, Les, and I do this. We set our yearly calendar out, and we put all of our major events on there, the children's birthdays and our anniversary and my birthday, her birthday, and the different things we want to do with the children, different things we want to do with our individual lives, different places we want to travel. And then we work. Now, we still work, but we work our business around our life. Isn't that the life you'd like to have? See, that's just, once again, that's a dream. That's not a reality to most people, okay? But that's what we talk about at Primerica. And so if you look at it, what determines your quality of life? Number one is how you make your money. Number two is how you manage your money. Now, at the end of the meeting, just think about this. Those two things are very important. And ask yourself, how do most people make their money? Well, if you look at it, this is out of the book, Cash Flow Quadrant by Robert Kiyosaki. And he talks about something very simple. If you look at this, you know, if the people who have a job, nothing wrong with this. There's absolutely nothing wrong with if you have a job, if you love your job and you're called to that job, that's fantastic. But when you have a job, you basically have no control of your time and no control of your money. Once again, that's not a good or bad thing. It's just that somebody else is controlling your time and controlling your money. Now, you love your family. You may want to spend time with your kids. You might want to go see a ball game. You might want to take your kids to school, pick your kids up from school, go to school during the day. You might want to do some special. But if you don't have the time to do it because you have a job, because somebody else dictates when you got to work, you can't do those type of things, right? And maybe you can say, you know what, I want to provide better for my family. I want to do those things that I just saw on that slide. But you know what? And you can go back to your job and say, listen, I need a 10 or 20 or 30, 40% pay raise. Now, you can do that, but they're going to probably call the drug dogs on you, okay, and try to drag you out of there because they'll think something's weird about you. They're not going to give you, they're not real liberal with a till. They're not going to give you pay raises because then it dips into to their profit margin. Now, there's nothing wrong with it. That's the number one objective of a business is to make a profit, and you're working with that company. So they control your time and your money. If you look at being self-employed, that's fantastic. People go back and get maybe a better education, maybe learn a skill, maybe like a hairstylist, a doctor, a dentist, a salesperson. And as long as you're working, you get the opportunity to make more money. And you can work hard and you can make an unbelievable amount of money. But when you stop working, when you leave that business, then your income stops. But it's probably better than, because you're at least in a limited control situation, okay? Once again, want to make a little bit more money? Fine, just work a little bit harder. You want to enjoy your time? Go ahead, but just understand the income stops, okay? And you are basically the job. Okay, now you look at a business owner. I got a friend of mine owns several McDonald's franchises, and if you think about that business or anybody that owns a business, the objective is to have a business so you got control of your life. What does that mean? Once again, time and money. So let's say you go to one of those franchises, you go into a business, and maybe the service isn't as good, maybe the food isn't as good as it should be, and you start talking about wanting to see the owner. I can assure you the owner of those establishments are not going to come around out of the back. An employee is. You don't go into business to have to work all the time. You go into business, you got a quality of life, time and money. And so there's got to be a system there. And that system ought to be able to be run where that business runs with or without you. That way you know you have a business. And the other thing is in the cash flow quadrant is to become an investor. And it's the old concept, the old fable, the goose that laid the golden egg. What you want to use, you want to fatten that goose, get that goose as big as you possibly can. So at some point in time, that goose is so big, the golden eggs never stop coming out. And that's the way it is as far as accumulating wealth and becoming financially independent, being an investor. You want to set money aside, set money aside, set money aside. So at some point in time, you can live off that interest and give you the quality of life you want. So instead of you working for your money's now working for you. Now, given a choice between being on the left side and right side, which would you rather be on, the left side, right side? Okay, most people would rather be on the right side. That's simply what we do at Primerica. We teach people how to make that transition, if they want to, from the left side to the right side. And it can be in both of these quadrants, or it can be one of the two of them, okay? Now, if you look at this, once again, working for yourself, having your own business pays off. If you look at those people who have their own business, run their own business, they make more money and they accumulate wealth much faster than those people that work for somebody else. And it's a distinct difference, okay? It's not a small difference. That's a major difference. Now, if you look at this, you say, well, then why doesn't everybody have their own business? A lot of people think it's just strictly the money. That's a major part of it. But it's not the key is. The key is they don't have the ideas, because if you got the ideas in today's economy, in today's society, somebody's going to back you financially. But the fact is, to have a business, you need great ideas, and you need a lot of money. Now, I don't know about you, but I was a teacher and a coach, okay? So all my degrees were in education and coaching. So other than that, I didn't have a lot of ideas. So there's not a lot of people that would back in the ideas I had. Now, you may be different, okay, but most people aren't. And if you do get the money to have your own business, most of the time you got to pay it back. And if it doesn't work, now you're out of business and you're out of money, okay? So if you look at it, Primerica is a little different. Here, you're in business for yourself, but not by yourself. Let me show you what I mean by that. Look at this. This is Primerica. We're a New York Stock Exchange company. We're very excited about that. We're listed as PRI. And we hit the marketplace like a bomb. It's so exciting what's taken place with our company this past year. Now, I want you to look at some of these things. Primerica was named one of the best performing IPOs of the first quarter in 2010. Look at the different companies that have been invested in us. Among those initial investors were companies like Legg Mason, Invesco, companies like Franklin Templeton, Oppenheimer, and AGF investment firms, plus 200 different companies. Look at this company right here. This is neat. Warburg Pincus, our biggest initial investor. Private investment offices around United States, Europe, Asia. Private investors since 1966, approximately $25 billion under assets under management. Look what they said about our company. They said at Warburg Pincus, we look for companies that we believe deliver a high-value product to the consumer. We're very consumer-oriented here, and so were they. We believe Primerica is uniquely positioned to be the top financial service distributor in all of North America. How great is that, okay? You get a chance to be a part of something like that, right? Look at this, another one by Barron Capital Management, founded by Ron Barron in 1982, another $16 billion under management. That's $41 billion under management by just these two companies, okay? And you look at it, it says Ron Barron is listed, he just personally, as one of the Forbes 400 richest men in America, people in America with $1.3 billion in assets. Maybe a little bit more than that school teacher at Piper or Weller is going to talk to you a little bit about Primerica, okay? So you look at this, look at what he says. Barron Funds invest for the long term in what we believe are unique, well-financed businesses with open-end growth opportunities and substantial competitive advantages. That's huge. We are most interested in business like Primerica that provide products with broad appeal to the underserved market. That's what we do. We help people that other companies might not necessarily want to help or do help. Says, we like to say Barron Fund invest in people, not just buildings. Primerica is a good example of a company that meets our investment criteria. Now, once again, you got to look at that and think about this. Is this solid? Is this real? These factual type things? And so if you look at it, look at the size of our company. We're the largest financial service company, marketing organization all in North America. We have 100,000 licensed representatives across this country. A lot of people ask all the time, how do y'all sell so many products? How did y'all get to be so big in all the different marketers? Why do so many companies want you to market their products? Because of that, we got the sales force. So logic says the larger the sales force, the more ability you have to market financial products. And let me give you some companies that believe just what I said. If you look at this, you know, we got a 33-year proven track record. So we're ranked number one of term life insurance in force. So we're in that business. We've got 4.3 million people insured, 2 million investment clients, $25 billion under assets. We're accredited by the Better Business Bureau, doing business in the most highly regulated industry, rated A+, in almost all of our insurance divisions. And if you look at this, all these people can't be wrong. These are facts, okay? This isn't maybe. This isn't me up here trying to hype you. These are facts. And if you look at these companies, why do companies like these want to do business with Primerica? I mean, these are some of these people are even our competitors. And yet even our competitors and some of these other companies that we've been doing business with for years want to bring their financial products to us. And the reason they want to bring their financial products to us, all of which these companies you've probably heard of, is because they know if they do business with us, they're most likely to get their products marketed. Now, here's what we do. If these companies don't deliver consumer-friendly products, we refuse to market them. And so these companies here have designed different products that we think are good for the American consumer, and we get those out to consumers so they can be served, so they can become debt-free and financially independent. Now, if you look at this, we're a Main Street company delivering to Main Street families. And we have very simple philosophies, common sense solutions. Okay? If it's complicated, we don't offer it. Because the last thing a consumer needs is somebody coming there, talking over their head or acting like they don't understand. And money's not that tough to understand. We just want people to see it the way it should be explained. And we teach people basically how money works. Very simple concept. Let me show you this. Ask yourself this. Now, it sounds kind of silly. It sounds like I'm setting you up, and I really am, okay? But on a scale of 1 out of 10, 1 meaning you don't care, 10 meaning you're dead serious. How do you think if you took me to see 10, 15, 20 of your friends, and I ask them this simple question, scale of 1 out of 10, 1 meaning you don't care, 10 meaning you're serious, how would you rate your desire on a scale of 1 out of 10 to be debt-free, financially independent, and properly protected? What do you think everybody says? Everybody says 10. I've been here 30 years. I've never had but one person in my 30 years tell me anything other than 10. Most of the time they say 10, 12, 14, 15, 18, right? But everybody wants to properly take care of their family. Everybody wants to be debt-free, and everybody wants to be financially independent. Let me ask you a question. Do you believe it's possible in America to properly take care of your family, be debt-free and financially independent? You think it's possible? You know it's possible, right? But everybody thinks it's possible for whom? Somebody else. Well, let me ask you a question. How would you feel if you woke up tomorrow, your family is totally taken care of, you're debt-free and financially independent? You'd probably think you're in a coma still sleeping, right? Well, you know what? If you think about that, ask yourself this. Most people have the desire, if they believe it's possible and they think it'd feel unbelievable, then why aren't more people financially independent, debt-free, and why don't they properly take care of their family? Now, let me tell you what people realize. And when you ask this question, how do most people manage their money? You know what the answer is? They don't. Most people don't manage money. The answer most people give on that is when people don't make enough money. That's not true. Look at this. If you, in your working lifetime, let's say you work 40 years, okay? And let's say you make $30,000 a year. That means in your working lifetime, you will have been paid $1.2 million. If you make $40,000 on the average, 1.6, if you make 50, that's $2 million in your working lifetime is going to come through your fingers. Is that incredible? $2 million. Now, if you and your spouse or significant others work, both of y'all make 30, that's 2.4 million. 40, that's 3.2 million. 50, that's over $4 million. Now think about that. How in the world can you have all that money coming in and yet not have anything to show for it when it's over with? I tell you what, at 29 years old when I saw this business, I knew this. My wife and I were on the path to make that kind of money, and yet we weren't saving and investing the way we should be saving and investing. We had some debt built up, and you know what? You'll find out everybody's in the same boat. It's not just the people are not making a lot of money. It doesn't matter how much they make because most people simply don't manage their money properly. And so we work with them on this. Now look at this. Let's go back and let's say at 25 years old, and let's say your goal would be to accumulate $1 million. Now remember, you don't have to make that much money, but you got to manage it right. It's not what you make, it's what you keep. They're very simple principles, right? This is called the high cost of waiting. And let's say you start at 25, $158 a month. If you did that for the next 40 years, you'd be a cash millionaire. Now ask yourself a question. I went back to my 40th reunion recently, and when I went in there, out of all the kids that graduated from my graduating class that I know of, only a few of them were millionaires, okay? Myself and a few others, right? Now, think about this. They were all the same age. Then how, you telling me in 40 years they couldn't set $158 a month aside? Is that unbelievable? There were some teachers and coaches that taught and coached when I was there, and now they're a lot older, and none of them were millionaires. Now, how in the world can you teach and coach, have all these degrees, and never even realize all you got to do is save $158 a month on a consistent basis, leave it there, be disciplined, leave it there, and you become a millionaire? Is that unbelievable? This ain't hype. These are facts, right? But if you wait and procrastinate, now all of a sudden the price goes up, $442. But you can still get there, right? You just got to be a little more disciplined. You got to save a little bit more money, maybe make a little bit more money. Or, I mean, if you wait another 10 years, look at this. All of a sudden now it starts saying, well, money's not what it's built up to be. People start making excuses, right? Well, money's the root of all evil, which it never says that in scripturally, okay? It's the love of, I understand that, right? But it's talking about $1,300 a month. Well, maybe we could find some ways in your personal finances you might be blowing or wasting $1,300 a month. Or maybe we can show you how to make an additional $1,300 a month, and you can still get there in 20 years because you're probably going to be alive the next 20 years, so you can still get there. Now, you'll be 65, or 20 years is going to pass. The question is, you're going to be a millionaire or you're not going to be a millionaire, right? Comes down to how you manage your money. And if you want to get there in 10 years, now this is what, I know you think I'm crazy, but I'm telling you, when I saw this, when the guy recruited me, showed me this, I said, if you can, I couldn't believe. I said, are you kidding? If I can make that on a part-time basis, stay in teaching, stay in coaching, you teach me how to do that part-time, I'm very disciplined, I'll set all that money aside. I said, I didn't know anybody my age or even were close to my age that were cash millionaires. I didn't know anybody like that. I said, I'm 29 years old. If you teach me, I'll work here part-time, I'll discipline myself, I'll save my money, and by the time I'm 40, I'll be a cash millionaire. Now, we did it sooner than that, but that's what got me excited. I said, teach me how to do that on a part-time basis. Now, what if we could find that for you? What if we could find half of it in your household? What if we could show you how to maybe adjust some of your personal finances and make a little extra income with us, and you could do that in 10 years? Now, all of a sudden, you jump up 5 years. You say, well, I only got 5 years to go. I want to get there in 5 years. You know what? There's a lot of people at Primerica have done that, either as clients or as our agents. because what we've done is we've helped them to find money, maybe undercover money that was out there, free up some of their personal expenditures and start investing that money. And then a lot of people have come into business with us, and they started making some great part-time income, turned this into a career, and they started making incredible amounts of money and started socking that money away because they understood the purpose of making money and doing what we teach is being financially independent, being free. And so, you know what? But if you wait till you're 65, too late. You're out of here, right? I mean, you got to get going. You understand? This is called you got to get going, right? Now, if you look at this, this is the biggest thing. Money mistakes. This is what we teach people. It's just simply not understanding how does money work. I didn't understand what I just showed you before, but look at this one. This is called bypass the middleman. Now, who's the middleman? For most of us, we grew up, and ask yourself this. Who do most people do business with? You think about with their personal finances. You think about this. Banks, credit unions, savings loans, insurance companies. Now, why do they do business with people like that? Anybody want to help me? It's all they know. If it's all you've known, if you grew up in Russia, you'd probably speak Russian. If you grew up in Germany, you'd probably speak German. If you grew up in Spain, you'd probably speak Spanish. You know, whatever you're trained, that's what you, so if that's all you know, that's what you'll probably do, right? Well, what these do, when you put your money with those institutions, you and I both know, they don't take your money and put it in a vault in the back of the bank or back of the insurance company. They don't do that kind of stuff. They take your hard-earned money and they invest it in the world or global economy. And so we just teach you how to do the exact same thing, just bypass the middleman and get the same rates of returns they do. Now, people ask me all the time, Bill, is it that big a deal? Well, let's look and see. Let's say this is called the Rule of 72, one of the most incredible things I've ever seen in my entire life. To this day, I get excited every time I talk about this. And to this day, I get excited about looking at every piece of my personal finances and think about what am I doing? Where am I wasting my money that I could be investing in doing a better job with? Because we're all supposed to be stewards of our finances. And so let's say tonight I gave you $2,000. Now, it ain't going to happen, okay? But let's say I do. And you take it down and get 3% interest. Well, 3 goes into 72. That means your money's going to double every 24 years. Now, that means you better be planning on living very old if you're going to have anything in retirement, right? So in the next 24 years, it doubles again to 8,000. Now, I don't know where you went to school, but I know this. 3 plus 3 is what? Help me out. Okay, so we got half the audience got that right, all right? 3 plus 3 is 6. So I was thinking, if you double your interest rate, you ought to double your end results. But that's not, it's called the magic of time and compound interest, of which Edison said was the most incredible thing he'd ever seen. He was a pretty smart dude. Look at this. Yeah, your money's going to double at 6%. Your money's going to double every 4 years. It starts compounding at the end of the 48th year. You got 4 times more money. Now, let me ask you a question. Oh, you got 3 interest rate higher. How in the world did your 3% get you 8,000, but the additional 3% got somebody else the additional 24,000? Why didn't it at least split it with you? Is that unbelievable? For not knowing how money works, you potentially lost that kind of money? Now look at this. Let's say you get 12%. People say, well, you can't get that. Well, you can if you understand how finances work and how money works and bypass the middleman. But say credit cards. They charge you that kind of interest rate for credit cards all the time. So look at this. Now 12% goes into 72. Your money doubles every 6 years. So watch what happens there. In the 48 years, that's $512,000. Now let me ask you a question. Your working lifetime, you think you might blow $2,000 or $3,000 or $4,000? How many of y'all think you do that? You didn't blow $2,000. You blew $500,000 by not understanding how money works. Now, if we sit down with you, you don't think we can find money that's being wasted? It's incredible how we discover money. So we start looking for money and advise people, and when they take advantage of this, like they do a while ago with a high cost of waiting, they open up maybe an individual retirement account or a college education account for their children, or move money out of CDs and money markets and life insurance into a better program. They maybe move some old 401k money over, and you don't have to understand all those terminologies. Just understand people are looking to do a better job with their finances, and we help them do that, and we get paid to do that kind of stuff. Is that incredible? Now look at this. So you say, well, how do we really help families? Okay, well, one, we help them find the money. So let's say the average, now this is not the typical family, okay? In America today, probably 56% of the families in this country are not double income families. So, however I show this, it's probably worse in most families, right? But let's say in this situation, there's dad making 30, mom making 30, right? And so combined income, 60,000. Have you ever asked yourself this question, or you ever heard anybody at work say this? Where does it all go? You ever ask yourself that question? At the end of the month, where does it all go? You ever had, the month's over, cash is out. right? And you want some more months so you can get some more money coming in, but it ain't possible, right? So if you think, where does it go? You pay your bills, you got insurance premiums coming out, you got things like debt, which simply means don't ever buy things. But yet we do, right? We buy things we can't afford all the time. You got mortgages, which is one of the things most people can't afford. You got taxes. And then, then if anything's left over, we give and we save. And it should be just the opposite. If you're going to become wealthy, you got to reverse those type of things, right? But let's look and see what we do. Let's look at this. Overpaying taxes. Simple thing. But the average person who pays taxes, this is the situation. In the year 2009, the average tax refund was $2,960. Almost $3,000. Now, what is a tax refund? Just think of that word, refund. Means you did what? You overpaid. And so when you get back a tax refund, I know we used to sit around coaching office getting excited, bragging, who got back the most money? And we didn't realize how silly that was. We were getting back our own money. And so if you think about that, that's $246 a month over 35 years. If you make zero interest on your money, you'll get back $100,000 in your working life. But that's your money. Okay, that's with no interest. If you took that money and go to your employer tomorrow and change the way you're doing your taxes, and let's say you start, you're not saying everybody's going to, but if you start getting the same money back and you open up an individual retirement account or maybe a college, whatever you want to put it into, okay, and you got 3%, that's $182,000, which to me is better than 103. How about y'all? I think it is, right? And if you look at 6%, that's $350,000, but at 12%, that's $1.5 million. I hope you're starting to see all the different ways that you can accumulate wealth. So here's your choice. When we sit down with a consumer and they make the right decision, we ask them, here's your choice. You can either open up an IRA or you can pay the IRS. And you know what? Most people say, well, I want to have an IRA rather than paying the IRS. And that's how we help people become financially independent. Now let's look at this one. Going back to debt. Big mistake. Debt's a big mistake, right? But everybody does this, right? So if you look at it, let's look at a mortgage, because a lot of people don't realize a mortgage is a debt. How many years does the average consumer finance their houses? What would y'all say? 30. You know, every time I ask that, everybody knows. Even people that don't have a house, they say, well, of course, 30. Like everybody's supposed to do 30. No, the best thing is you need to get that thing paid off. A mortgage is a debt. And if you stretch it out for 30 years, you pay back way more than that house is worth. Okay? Now I want you to look at this. Here's what we do. We sit down with everybody, and we can't help everybody in this situation, but it's free to find out. So what we say, let's look at your mortgage. So we list all the information down your mortgage, and then we say, other than your mortgage, your payment, what you're paying your interest, who's it with, and et cetera, and other, what are the three biggest personal debts people have outside their mortgage? What would you say? Car notes, credit cards, student loans. Exactly right. Isn't that incredible? Those are the three big, everybody answers that the same everywhere I go, right? So we say, now once again, we don't know if we can do this, but we take your information, we simply send it to one of our people, and then they come back with a solution. So you got the problem, we come back with a solution, and if we can help you, here's the way it looks. You were paying $2,700 a month for all your total debt. Debt is debt. We blend this stuff. And look at this. Now we've refinanced. We pay off whoever your mortgage company was, pay off all these over the people that you have debt. If it's to your benefit, if it doesn't have a tangible benefit, we don't do that, okay? And so now your monthly debt note, drops down, and we just saved you, in this case, $1,367. Now ask yourself this question. If this was your family member, or if this was you, or is this one of your friends, would they be excited about that? Now, you ought to be excited, too, because we get paid to help families. Isn't that incredible? Now, how many of y'all out there, how many of y'all like helping people? Good. How many of y'all like making money? Then you're going to love Primerica. So look at this. We saved them $1,367 a month in that analogy. Now, what would most people do with that money if they weren't advised? What would they do? Spend it. Go back, get in debt, right? And the whole thing starts over again. What we say, no, take some of that money and start maybe putting some of it toward the principal, say $433. That's going to reduce that. You're going to be totally debt-free in 15 years. What was our goal? Debt-free, financially independent. So now we're debt-free in 15 years. Then we take some of that money and stick it aside. That's $387,000. If they did this, and the market averages that for the next 15 years, that's $387,000. So they're debt-free, and they get $387,000. Now let's say you don't do this. You're still in debt, and somebody's got that $387,000, and it's not your family. Is that incredible? Now, I don't know about you, but anywhere I think I could accumulate an extra $387,000 the next 15 years, I want to know about it, right? And if you let that thing compound, remember that 2,000 compounded? Remember that 150, $3,000 or $4,000 a month compounded in our other examples? Compound that out now because you're debt free. You don't have any notes, so you can start compounding. That's an extra $3.55 million in retirement. You say, well, Bill, maybe you can't help me that much. Cut it in half. That's still a $1,700,000, $1,800,000, but maybe we can't help you that much. Cut it in half again. That's still $900,000. Maybe we can't cut it again. Okay, that's an eighth. Cut it to an eighth. That's still $300,000 or $400,000. We helped you. How many of y'all agree every $300,000 or $400,000 retirement adds up? Okay, guys, what we do for people is unbelievable, and we get paid to do it. Now look at this. Let's say you don't qualify for that, or maybe this is a better program. We have a thing called Debt Watchers. And what we do is we talk to people about, do you know your debt freedom date? Most people don't know that. We ask them, do you know your FICO score? You know, that's a big thing in today's economy because in society, because adults, you know, they don't feel like they got control of their score. Maybe their credit, but of their score. Do you really know those type of things? Because that affects everybody. Have you ever had your identity stolen? How would it affect your family if you did have your identity stolen? Man, and you know what? The younger group of people, they don't check their identity scores as much as the older people, and so consequently, they fall prey more than the older people do. Now, so we talk about these things because this can totally destroy your future if you don't get that taken care of. So we run that on, and we track it for you. We let you know how you're doing. We let you know how you're progressing, and you can check this on a day-to-day basis. Now, let's say this. Let's say you don't qualify, maybe, for one of our other lending programs, but we just do what's called debt stacking. Once again, it's not important you understand all these details. It's just important you understand concepts. So let's say you got some credit cards, car notes, stuff like this, and your total monthly notes this. So $2,720. So let's say we take your $220, we pay that one off, and all of a sudden start stacking it on top of the one that maybe needs to be paid off next. But we don't listen to this to guesswork. We run it through the computer. You'll see exactly what you ought to do, and they'll let you know how you're doing. They'll keep track with you, right? You get off balance. Your balance starts going up. You start getting off track. We contact you, right? Because our goal is to work with you hand in hand to get you totally debt free. And then you keep stacking that thing up, and look at this. All of a sudden now, we've got you you're wiped, you're totally wiped, you wiped all your debts out. Wouldn't that be great? Wouldn't it be great to wake up tomorrow? You still feel great. We help you do that, right? Look at this. Without debt stacking, you're going to be out of debt in 2030. With it, that's 182 months sooner. If you look at the interest you save, without it, you save nothing, but with it, $130,000. Compound that thing out. Interest paid, $214, with debt stacking, $83,000. That's a tremendous saving to the American consumer. And so if you look at the monthly payments, look at that. All of a sudden now, same monthly payments. We're not coming in here and say we got to spend more money. You're paying the same thing, but we just accelerated that thing, right? And if you look at the difference that would make, that's $2.87 million if we invest that money once we got you out of debt. Is that incredible what we do for the American consumer? Now you start understanding how we can get excited about what we do. Now ask yourself a question. How would your friends feel about that? How would your relatives, because a lot of people say, well, Bill, that sounds exciting, but who would I go talk to? Just anybody you love, anybody you know, anybody that you think would like to be helped. And you know who that is? Everyone. That's a pretty big market when you talk about everyone, right? So if you look at this, buying the wrong kind of life insurance. Now, if you're sitting in this audience, you say, you know what? I am so excited. Y'all talk about life. When's the last time you and your spouse got together, got in front of the fireplace, maybe listen to nice guy, little steak dinner, little lobster dinner, maybe a little something to drink on the side, and you broke out your life insurance policies? You don't do that. Nobody does that. You buy them from somebody, stick it in the closet, and you never look at it, right? So I want you to look at this. Let's take this situation again. Go back to mom, dad. Remember what happened. We had all that money coming in. As soon as it was coming in, what was happening to it? Going right back out, right? So let's look at this situation. All of a sudden now, we realize the purpose of life insurance is basically to determine, if you really, how much you need, when you need it. It's called the theory of decreasing responsibility. Now, it may not necessarily be, because a lot of people think, well, when I'm young, I need more life insurance. That's not necessarily true. It's when you have the highest responsibilities, you need the most amount of life insurance, okay? When whatever's left behind, the family left behind, and the responsibilities left behind would be wiped out, would be devastated. So if you look at, for most people, when you got young children, high debts, big mortgage, loss of your income would be devastating to the people left behind. but you got time to start investing money. So you need to buy the proper amount of insurance, and then down the road, if you're investing properly, if you're investing the right way, over time, that money starts growing. And at that point in time, maybe you don't need as much pure life insurance because the combination of both could still be left behind for your family. However, if you make a decision down the road, you know what? Maybe I've started accumulating more money. Maybe I've got some more debt, or maybe I've got some more children. Maybe I've got to take care, because now the boomerang era, right? The kids leave, and they come back home with somebody with them, right? So your responsibilities may go up. Well, the flexibility here is you're in control. Isn't that what you want? You're in control versus the other type of insurance out there. So at some point in time, you may be able to let your insurance decrease, and you got your cash up there. Now, once again, you're debt-free, financially independent. You may not need as much life insurance, but if you do, then once again, you're in control. So here's the problem. Because see here, your children are grown, lower debts, mortgages, etc. Retirement income's needed there. But here's the problem. If something happens, let's take Dad over here. Okay? Pam. Old Dad's gone. Poor old Dad. All of a sudden now, your household income ain't 60. Your household income now is solely dependent upon whoever's left behind. Now it's down to 30. All those things you had, they're not going to disappear. They're not going to go to my wife, Leslie, if I die, back when I was teaching coach, and say, Leslie, Bill was a good old boy. He was a great guy. Good people loved him, all kind of stuff. You know what? Just keep the house. It's on us. The cars? Nah, just keep them on us. All those bills you owe, we'll wipe them out. They don't do that. They say pay for the house or what? Get out. They say pay for the cars or what? Get out. Now, is that fair? Yes, it's fair. Because you made an agreement to do what? Pay the bills. And people ask me all the time, well, how can I get to bill collectors and quit calling? Pay them. It's amazing. Okay? So life insurance, what this does is replaces the income of whoever passes away, and that's why it's called income replacement. And so we want to keep these things whole. So in that case, if you had $500,000 life insurance on a husband or wife, then you know what? That would provide enough income to take care of the situation, and the standard of living would never change. Isn't that what you want to do? Don't you want to properly protect and take care of your family? I think most families do. But here's the problem. The problem is they're sold the type of life insurance that really they cannot adequately take care of their family. Because these products right here are great for two people. They're great for the company that sells them, and they're great for the agent that sells them. But it's not great for the consumer. Now, when I saw this, to be honest with you, I went ballistic, and I didn't own this. I wish I would have, to see how upset I really would have gotten. But my wife, Leslie, was making about 3 or 4 or 5 times more money than I was. She was selling real estate. I was coaching. So I got thinking one day, I said, if I die, just a burden off her hands. Then I'm thinking, wait a minute, but if she dies, I lose everything, right? Now, I don't know which one it is in your household, but I do know this. For most of you, somebody's the breadwinner. It may be shared. But if one of the two people dies prematurely, you die too soon, the other one's wiped out. So most people buy what's called whole life, cash value, universal life, and you say, well, Bill, I don't understand life insurance. Here's all you got to ask yourself. Does it build up cash? Oh, yeah, I got that. Then you need to really talk to us. Now, look at some of y'all's faces in the crowd. You own that stuff, okay? You ain't smiled, you ain't said, you're poking each other. Everybody owns that stuff. Don't feel bad about it. Everybody makes that same mistake, right? Because there's no reason you would know about this. So what you say is you're paying $218 a month, no insurance on the kids, $150,000 on John, $150,000 on Mary. Something happens, you know what? That might last your household 3 or 4 years. And then you got to figure out a way to come back to life. I don't think that can happen, right? So the family gets wiped out. So what we do is we go in there and we just compare. We say, listen, here's what we can do. We can put $500,000 on John, or maybe it'd be Mary. Depends who the main breadwinner was. $300,000 on Mary, insure the children, that's $825,000 of total coverage versus $300,000. And look at the price. We saved you $123 a month. Now that's extra money to do what with? To invest, to help you become financial. So now we've properly taken care of your family. Now we got to take that money and start investing. And if you did that outside your policy, so if something happened at retirement, look at this. That's an extra $466,000 in cash. Guys, are you starting to see the different things we do for people? We're using the same money. We're just doing a better job with it. Now, could this company here do the same thing? Absolutely. But they don't. So what we do is when we sit down with people, we say, listen, here's the difference. You make the choice. Now, most of your friends are going to say, well, I'd rather take care of my family than take care of that company or that agent. Fantastic. Then you do the business with Primerica. We're the only company that only sells term insurance 100% of the time. Doesn't that make you feel good to know you're being with a company that won't talk out of 2 sides of their mouth? I love this company. Now, if you look at this last one, okay? You look at the, on life insurance, look at the different, because this is where it's reality. You know, because we can talk theory. There's an old saying, you can disagree with an opinion, but you can't disagree with a testimony. These are families we've helped. And I guarantee you, I'm not sure about this, but I'll bet you a lot of these families were helped by part-time agents like some of y'all that come in this business, learn this business, see if it's for you. But look, here's a male, age 41, motorcycle, had $150,000, wife and 2 kids, age 6 and 12. We delivered $643,000. Would that make a difference in a household? The next one right here was killed in Iraq by sniper fire, and his wife was expecting, had no insurance. We delivered $400,000. He was 26 years old. Now, you can't bring that man back. You can't replace that soldier, but that family doesn't have to be wiped out because nobody did the right thing for them. This guy never had a plan probably. Somebody sat down with them and helped them put together a plan, a financial independence plan, a debt freedom plan, and a plan to be properly protected, and he was. And that family is going to benefit from that. You look at this next one, shot while on police duty. These are people giving their life for the country and for the communities. $37,000, we delivered $550,000. We don't sell policies, we change lives. You look at this right here, expected wife, and they already had 1 child, age 3. Look, go down, vehicle accident, nothing, $250,000. Cancer, no insurance, almost $300,000. Left behind that husband, those 2 children. Because it's devastating it would be to lose your mama and your wife. How bad it would it be for not be able to provide the proper child care maybe, or that dad not be able to stay home and try to spend time with that 4 and 8-year-old. You look at over here, this, you know, the male right here, 32 years old, killed in a car accident, $40,000, and we delivered $200,000. And that wife and those 3 children now can maybe live in some dignity and decency. Female right here, age 50. Pneumonia. Look at 80,000. We delivered 80. They had 80. We delivered 400,000. And now that husband, that son, can continue their life. Doesn't it make you feel? See, to me, when I first saw this, we started talking about insurance. I don't want to be involved in insurance, but I want to be involved in making a difference in people's lives. And you look at this, overpaying for other types of insurance. Most of us don't know how much we're paying for our car insurance and homeowners insurance. We see these ads all the time, but we don't do anything about them. And we sit down with people, and what we do is we look at their homeowners insurance and their automobile insurance, and we have a thing called Primerica Secure, and it's a referral service, and they quote some of the top companies in America, the top 20 companies in America. We get competitive quotes in those within 10 minutes, and on the average, we save people out $40 a month. You say, well, $40 a month isn't much money, but first of all, I've seen people save as much as $250 and $350 a month, but just use that example. That's the average. But it all adds up. Look at this. It all adds up. If you just took that little $40 difference and put it in where it should be put, that's $140,000 more toward retirement. Now you start adding all that up. And you take what we saved them, all the different product lines. And I'm not saying we can save everybody everything. But what if we've saved you a little bit here, a little bit there? Is that incredible what we do for people? And then, so what's the problem though? That most people, the oldest saying in the financial arena, most people don't plan to fail, they just fail to plan. Most people want all those things, they just don't have a plan. You know why? Nobody's ever sat down with them. Isn't that sad? Nobody sits down with middle America and helps them out. So if you look at this, what do you do next? Here's what you ought to do. If you're in this audience, we didn't bring you here to sell you anything. But if you saw this, I know the first thing that I said, look, I'm joining your company. This is incredible. And I went home, told my wife, I said, you know what? I said, I would do that for nothing. She said, oh, no. You've been teaching for 8 years for nothing. You're going to get paid this time around, right? But the first thing I told the guy was showing me that, I said, look, first thing you need to come to my house. Everything y'all talking about, we're doing wrong, and we're pretty educated people. You need to come to my house, sit down with me tomorrow, if not tonight, and show me how you can benefit me and my family. And so what we do is we sit down with people and do what's called a financial needs analysis. It's complimentary, it's customized, and it's the most regulated. We're in the most regulated business in the world, so nobody's going to know anything about any of your information, okay? So we're going to set you down, we're going to work with this for you, and you ought to get that done within the next 24 to 48 hours, right? Now, let's say you'd have done this, okay? Now, we have different contracts. I'm going to explain that in just a second. So let's say you're in the lowest leadership contract we have. We don't call it management, we call it leadership, okay? Because we're not your boss, we're not your manager. We're going to show you how to build this business, or help you build this business from a mentor leadership standpoint. So you have the lowest contract, and all you did was help one family in each of these categories. Sometimes a family will do all of them. But let's just say you help one family in each of these individual categories on that lower contract right there, right? Look at this. You just got paid an extra $1,476 for helping somebody. Now, say all you did was one of those a month and you never progressed up through our defined leadership program. And that's all you did. Each month was that. That's almost $20,000 a year part-time income. Now, I don't know anybody in today's society that can't use an extra $20,000. If you're making $100,000 a year, that's a 20% increase in pay. But the most important thing is, now think about this. It's how you're making your money, helping people, but you're also starting to build that business we talked about. Remember we said it's how you make your money, which how you manage your money, how you make your money. Now we're starting to talk about how you make your money. So all of a sudden you're helping people, but you've got a little business thing going here, right? So let's say you progress up a little bit, doing the exact same thing, but you're on a higher contract. Now you make more money. Now the reason you'll see this is that's got a built-in override program in there for all the products that we market. Just like the real estate business, like any other brokerage business, everything pays, most companies pay overrides and when people get in a leadership position because they got higher contracts. If you're one of our regional vice presidents, don't worry about the title. Okay, it's just a higher contract. Now doing the exact same thing, that's $2,800. Now when I saw that, I wasn't making that a month as a teacher. I was working 60 to 80 hours a week as a teacher and a coach. And I wasn't making that. Teachers today only make 50, 60, 70,000. So if you could do that, and you help one. Now what if you say, well, I want to make more money? Then you know what? Help more families. Isn't that great? So if you love helping people and you love making money, you're going to love Primerica. Now, let me take you to this thing. 4 things every business, and once again, we're talking about a business here, not a job. 4 things every business needs. Any business, whether it's a restaurant, retail, manufacturing, they need these things. They need location, okay? Building, supplies, equipment. They need licenses, certifications, etc. They need a client base, customers to market products to. And they need people, okay? All your successful businesses are never built by just one person. They have a team. They have good people. That's why you were invited tonight. Whoever invited you here tonight thought that you would be unbelievable at this business. Now, I know what you're thinking. You probably think, well, I did them a favor by being here. I'm telling you, they did you a great favor. The person that recruited me did me a phenomenal favor. Now, this gentleman makes an awful lot of money because I've got a pretty successful business. But you know what? He did me a favor because I could still be out there not making any money. So whoever invited tonight, you need to thank them after this meeting. Buy them a meal, buy them a steak, buy them a new car, something, right? So look at this. You can know everything about a business. You're starting, but you won't win without talented people. Now, talented people that recruit talented people. For example, Bill Gates had Paul Allen. Steve Jobs had Steve Wozniak. Thomas Edison had 3 business partners. So even the geniuses of the world had people helping them. So surround yourself with great people and you'll be successful and you're going to have great services or products, but you still need great people. So when you're sitting there the rest of the meeting, just a couple more minutes, think about maybe 3 to 10 people that you'd like to be in business with. And immediately when they said that to me, I started thinking, you know what? All the teachers and all the coaches that I work with, they all talk about needing more money. They all talk about wanting to have more time. And here's what shocked me. Now I want you to hear me in this because it's important. It's almost like a disclaimer. I thought everybody was going to be like me. I thought everybody that sat around and whined and griped and complained. I never did that, okay? But I heard a lot of teachers, a lot of coaches, people I went to church with, different things like that, my relatives, my friends. The 2 things they always complain about, not enough money, not enough time. And I said, well, if everybody complains, everybody's upset about that, everybody wants that, everybody wants to be free. I said, I got a pass. I got a way to show them how to be that way. You know what I found out? A lot of people don't want to pay that price. A lot of people don't want, they want to be successful, but they're not willing to pay that price. But you know what you're going to find out? Some of your friends are just like me, just like you. Not only they want it, they're willing to pay the price. That's who you're going to be able to recruit in the business. That's who's going to be attracted to something like that. And that's who you want to build a business with, okay? So let's look at this. Let's take the real estate business. Now, I don't know if you know anybody in the real estate business, but let me show you real quick how this works, because a lot of people have trouble understanding our compensation, and they think it's real complicated. It's not complicated. All businesses basically work this way. In a real estate business, you have a broker, okay? The broker is the one that has the physical office. They house the agents. They train. They develop them. but they get paid what's called an override. Now, they have a commission, and if they sold the house, they would make the full commission. But they don't go in the real estate business to sell houses. They go in the real estate business to have time and money. So if you look at it, they go out and they recruit. And let's say they recruit an agent, and they say, Bob, they recruit you, and you go out and you make $30,000 this year in commissions. So you get paid a commission. If you sold more houses, you get paid more commission. But this broker didn't sell one house, didn't have to drive people around the weekends, didn't have to put the balloons up, didn't have to walk around, put in signs in the ground, and made the same $30,000. Now, simple logic and mathematics said if that broker would have sold all the houses, he or she would have made 60. But that's not why they got into business. So now, same $30,000, which $30,000 would you rather have? That $30,000 the agent or $30,000 the broker? Broker. Why? Better quality of life. You got more time. You got more time. Same money, but it's the way you made your money, right? So let's say you recruit somebody else, and you recruit another agent, and they go out and make $60,000. Maybe they worked harder. Maybe they're just better. Whatever. It doesn't make any difference. They made 60. Your income just went to 90. That's called leveraging your time and your finances because you're starting to put together a pretty good business. Now let's say you offer to somebody else, and this person getting in is unbelievable. And they go out and they sell, and they put up all those signs, and they put up the balloons. They got the people driving their back seat, and they make $90,000. Your income just went to $180,000. Now, based on that, is there a limit on how much money an agent can make? Yeah, because there's only so much time. So you're either going to max out or you're going to burn out if you're in sales, right? That's that self-employment quadrant. Same thing with doctors. So, if you look at the broker, there's no limit. But here's the worst nightmare of that broker. So this agent comes walking in and says, Bob, I've been thinking. You know, I watch you around here. I'm out selling on the weekends. I'm putting those signs up. I'm driving people around. I'm putting the balloons up, and people still ain't buying. But when they do buy, I'm making money. But you're out there doing what you want to do. You got more time than I. You got a better quality of life than I do. You're making more money, and you got more time. And this guy or gal right here says, I think I'd like to have my own firm. Now, here's the problem. When this agent right there goes out and has their own firm, that broker cannot override that broker. What you do is you just kind of create your own competition. But see, that's the way it ought to be. This agent, man, they want to have quality life. So what happened to yours? Your business just went down. And because that person wanted a better quality of life. See, we don't have that same situation. In that type of business and other types of business, you're constantly building your own competition. Here, we say, no, we're going to reward you. Here, you're not rewarded. Now, what if you could devise a system like that, like we have? Every business would work like ours does. Now, let me show you this. Okay? Let's say you're a regional leader with us. You go out and help one family, and then you start building an override team. Why? Because people want to make more money. So you know 3 or 4, 5, 6, 8, 10, 20 people. Right now you're probably thinking about, I know so-and-so would be unbelievable at this. And you give them that opportunity, right? They don't work for you. They don't work for me. They're not employees here. They're self-employed. They're self-employed. They're independent contractors. And they're going to be paid through our company if they help families. So now you go out and recruit a couple of people. And that family goes out there and they make help a family. They get paid $14.76 from our company, not from you, not from me, but from our companies. And then they pay you an override. Now you say, well, that's only $261. You weren't there. And then say you recruit somebody else and they do the same thing. You just made an extra $522. And you might have been teaching, coaching, get a phone call from your friends and said, Bob, this is unbelievable. I just helped a family. I just made $1,400. And you're going to say, I'm so happy for you. But you're sitting there thinking, wait a minute, I went in there and I just made money because you're in business. All of a sudden you start thinking, that's how business people think. And your income's up to $2,259. That's called passive income. So once again, how many reps do you want to override? Then you need to get in a recruiting business. You need to understand you offer the opportunity to everybody and find out who really wants to get after this thing. Does that make sense to you? So let's look at this. Let's say you're on the lowest management leadership contract with us, and you just go out there and help a couple of families. That month, you made about $2,000. Part-time, that's about $24,000, $25,000 a year on a part-time basis if you just continue to do that and never progress. But now all of a sudden, some of those people you recruited, let's say some of these people you recruited, they start getting serious and they want to get an override position. So in that case, you become one of our regional leaders. Your production really doesn't go up that much, but then they do the years don't go up any personally, but they out there, they just help, once again, the same thing. They just help a couple of families, but you're in an override position. That's an extra $5,000, potentially an extra $5,000 a month. That's $60,000 a year in your little bit. So you got your job over here, but you got your business starting to climb up over here. So you don't have to give up the security, right? But for some of you, you're thinking, well, you know what? If I got to that point, I'd phase out of my job. Fantastic. You got that option, right? And if you keep building, then all of a sudden you become a vice president. Now your production didn't go up, but your contract went up and your income went up to $102,000. Now maybe you're different than me, okay? But I don't know a whole lot of, I know a lot of people act like they're making $100,000 a year. A lot of people say they're making $100,000 a year. But there's very few people in today's economy making $100,000. But it's not just how much you're making, it's how you're making that, right? Because now you got a business going. Now you're helping other families. But I want you to think about this. Your friends are going to be just like my friends. When I started recruiting, we started talking about doing something special. I was fortunate enough to get promoted to vice president. A lot of hard work, a lot of great people. And then what was neat about it was, unlike that real estate example, I didn't have to hope they didn't find out. I didn't have to hold them back. I didn't have to manipulate things. I was paid big money to help people go into business for themselves. So somebody in there, your friends, your neighbors, your relatives, see, and most times you don't want to be in business with your friends because you're trading money and somebody's going to get hurt. Not here. So if they decide they want to go out and help their own business, what happens to your income? When you help one of your friends, they just do the same thing you just did. That's not even a big team. And they do that, your income goes up to $150,000 for helping somebody else become successful. How great for giving them the opportunity to have their own business. How many of your friends would love to make six figures? And so that's what I do. I always look around and say, who do I know I can go out there and recruit and train and help make six figures? Now watch this one. This one is what's exciting. So now you got your firm, you got your business going. Now you've helped somebody have their business. And let's say then you find maybe 2 or 3 other people that want to have their business. You get your team going. You've just simply recruited more people. That you're helping them get it motivated toward their goals, not your goals, their goals. That means you help 3 families have their own businesses. Guys, there is nothing like this, in my personal opinion, in American business. The income there is $503,000. Is that incredible? Now, it doesn't stop there. It can stop there. If that's where you want to stop it at, stop her out there, right? But if you want to keep recruiting, keep building, you maintain your, what we call base shop. That's your initial organization. That'd be like that broker and those agents coming through there. And you start helping more agents go out and become brokers and open their own firm. And you become a national sales director with our firm. That means now you got 6 vice presidents. And the income there is $782,000. Now, once again, that just sounds crazy. It sounds crazy to me. But then I saw people doing it. And I said, well, if they can do it, I can do it. And I started recruiting my friends, and they said, you know what, I want to be a vice president. I don't want to just stay in there. I want to be a vice president. And so the more successful people I helped build and help them, the more successful I became. And then if you keep building your business, and you will, then somebody is going to, more people, if you stay after it, you say, well, that looks crazy. I understand that. But all businesses work like that expand. And so now you've got about 9 vice presidents. That's it, 9. 9 people. You can't tell me you can't find 9 people in the next 10 or 20 years. You say, well, that's 20 years. For that kind of money? Are you kidding me? And so all of a sudden now, they become vice presidents and they build a couple, which is going to happen. And that's what the income is there. Is that? Now, I'm not saying you're going to do that, but at least you got a chance. Okay? Now, let's look at some of these success stories and we'll wrap up. That's Ivan and Sharon Earl. They're a couple of our latest cash millionaires. It doesn't mean they're accumulated cash. They made that in a year. And he was a plant worker, joined the company at age 23, and became a vice president 2 years after that, and recently became a $1 million income earner, made over $1,039,000 last year. And this isn't hype. These are facts. You look at Jimmy and Tammy Myers, okay? Jimmy was a pressman working with his father in a paper company, 18 years old. Now, I don't know how many companies would give it to somebody, but that's how old you got to be to get licensed. Gave him an opportunity. Probably didn't know a whole lot about this business, I wouldn't think. And yet, look at this. You know, the guy became a vice president. His current income, $1.33 million. Is that? You look at this couple right here. I've had the privilege of recruiting him. His dad and I played college basketball together at Louisiana State University. His dad was the first African-American basketball player. He was my roommate. I had a chance to recruit Collis after he got hurt playing pro ball with the Pistons, and he came back to us, was basically a student, joined us in 2003, 24, became a vice president 24, and last year made $479,000. Isn't that incredible? Right at $500,000. You look at this couple right here from Maryland, George and Ursula Chavez. Was in the real estate business, joined in 2007. And you say, well, $125,000, that's not, look, you're free. You're free. And he's got a chance to build that, double it, triple it, quadruple it, like that if he wants to. Then you look at these couples. Okay, Brett and Andrea Burks, right? One of the hottest couples in all Primerica right now was a student when we brought him in, joined in 2003, became a vice president in 2 years. You don't have to be around here for 30 years. Now, you can if you want to, but you don't have to. And made right at $400,000 last year. Isn't that incredible? It's not even 30 years old yet. You look at this couple right here. Once again, it's with our team in Baton Rouge. And Yvette and Eddie. Yvette was a mechanical engineer. She didn't know anything about sales. She'd been out the plant for a number of years in an engineering business. Joined us in 2004. Became a vice president a year and a half. Over $200,000 in income. But she's free. Got 4 beautiful kids. One of them plays football at one of the major colleges in the United States. But she's not just make the money. She's got the freedom to go watch him play whenever she wants to play. She's free. You look at this gentleman right here. Frank Dillon was a psychiatrist. Now, sometimes that helps in the business world, okay? When you're dealing with people. Joined in 1995, and he became one of our vice presidents and became a millionaire within less than 7 years. Last year's income was $1.46 million, right at $1.5 million in cash flow. Look at this couple right here, once again, one of the hot young couples inside of our company. Because we don't care what your background is, what your age is, we're just going to give you a chance. And we look at this guy, was an advertisement, joined in 2004 at 25 years old, currently making $461,000. I think his income's even higher than that now. Is that fantastic? Now, I'm not saying that's going to be you, right? But I'm saying this, it can be you. And for the right kind of person, that's all you want's a chance. Now, let me wrap this up, because I want you to think about this, because I'm sure you're thinking, with all this success, they've been around 33 years. All these people making all this kind of money, all those families that got insured, all those families that invested money, all those families that they've helped become debt-free for the loan and lending and products. But look at this. Our goal is to serve a market that nobody touches. And currently, we've only touched 1.52% of the marketplace. That's an incredible, the market's so big we can't get to it. That's why we're here trying to get you in our business to help us to help families out there. So, we have a low upfront cost, $99 plus $25 a month. I'll hit that with you in a minute, what that covers. No inventory. We're obviously financially solid. We talked about that a while ago. And products that people really want and need, not a bunch of hype, but we do the right thing for people. Now, I want you to think about that. That's a pretty good business opportunity. I told you up front to think about the facts, and that's what I'm sharing with you right now as I wrap up. Say, well, then, Bill, if this thing's that good, why doesn't everybody join? Let me just walk you through this. I've seen this after 30 years. Number one, time. People use time for an excuse. I did that. I used that. I said, I'm teaching, I'm coaching, trying to raise a family. I was still playing some ball at the time. And I said, I just don't have time. And the guy hit me between the eyes. He said, you spend your time getting ahead or spending your time getting by? He said, let's look at your personal finances, Bill. He said, you've been teaching school a long time. Your wife's been selling real estate a long time. He said, if you don't have time now, when are you ever going to have time? I started realizing I needed to carve out some time to be successful. Number two reasons, money. And when I first got started, the licensing fees and things, you had to pay that as an individual. Now we cover most of your fees, and all you got to do is come up with the $99 to pay the basic initial fees, and then $25 a month to get the most incredible website you'll probably ever see to run your business. That's it. I mean, you can come up with that if you see the value in what we do. And I know that some of y'all do. This one right here almost got me. The confidence, the belief. See, most of us are the same. As a teacher and a coach, I was so confident in what I did. I knew I could do that. When I saw this business, I was scared to death. And if you're probably feeling anything else, you're a little different than I was, okay? And then they started talking about how the training program went, and that there was always somebody there with you. They wouldn't send you by yourself. And I said, well, that's like student teaching. You know, I remember the first time I got up student teach, I thought I was going to pass out. I thought I was going to hyperventilate, right? And then finally the student teacher came back in, stood there next to me and kind of helped me out. And after a while, I didn't want her even in the room because I thought I could take care of it on my own. I did the same thing in coaching. I didn't know anything about coaching, but I learned because somebody was patient enough to teach me. So you don't have to worry about that. You don't have to know everything. You don't have to worry about the confidence. We're going to be there with you all the time. We never send you out there by yourself until you tell us, I've got it down, I'm ready to go by myself. But this is a big one. It's called ego. Now, I'm not trying to push religion on you, but it means edging God out. And what it means is God can't work in your life when you got pride. I had a lot of pride. I said, well, you know what? What if I don't make it? And all of a sudden, here came the second element, fear. Those two big things right there, pride and fear. I said, how will I look if I don't make it? I was a very successful coach. I was a successful athlete in the Baton Rouge area. I said, if I don't make it, everybody's going to know. What if I don't make it? What if I fail? Then I started thinking, but what if I don't try? What if I do make it? And I turned that all the way around, right? And here's the one thing I can't overcome. I don't think anybody can overcome it. That's point number 6. If you have no ambition or no desire to have a higher quality of life than you currently are living, we can't help you. But I don't think that's you. I think most of y'all sitting here tonight in this crowd, I think you really want to have the quality of life I think you want more time, more money. For whatever the reason is, I think you want that, and I think you're willing to pay that kind of price. That's who we recruit. That's who we attract. So what next? That's the question all the winners ask, okay? And that's all I want to know. What do I need to do to get started? Just tell me what I need to do. Don't blow any smoke. Just tell me, and I'll pay that kind of price for success. Don't ask me to ever do anything illegal, immoral, unethical, because I won't do that. Anything else, I'll pay that price for success for me and my family. And in 30 years, they've never asked me to do something that was wrong. Never. And I'm very proud of saying that with this great company. So you need to turn in what's called your independent business agreement, your independent application. With that, initially it's $99. Once again, that's just your initial application fees to start getting your licensing process. We pay for the bulk of all your licenses. And then $25 a month, we call that your business building support system. It's absolutely the most interactive website you've ever seen. You go anything from licensing to training products to tracking your compensation to tracking where you are in the competition with the company for the great trips and things we take. But you need to get on this and you get this done right away, tonight, okay? And then within the next 24 to 48 hours, you know what I'd do? I'd sit down with the person who invited me tonight, and I would meet with maybe one of our key leaders or maybe the vice president, and I'd have them put me on a game plan together, a fast track of whatever you want to accomplish. And once again, it may be part-time income, it may be a full-time game plan. Whatever it is, we can put that together for you, and then all you have to do is follow it. And so you're in control. Keep your job. Nobody else wants it, okay? Keep your job and build your business. Or keep your job until you build a business. So there's no risk involved whatsoever unless you don't get started. And then there is a risk that you may have the same situation. And so it's decision time. If you don't make a change, the next 5 years are going to be the same as the last 5 years. And is that really what you want? Or is really what you want is freedom? Because if what you want is freedom, it lives right here. Thank you all very much for being here tonight.